Hello, this is Todd Wall from Aquatine Media, and I saw a really interesting story that I wanted to discuss about homeowners insurance. But before I did, I wanted to kind of give a little history lesson. At first, it might seem it's unrelated to this story, but then I'll tie it in at the end. So about a year and a half ago, there was a bank out in Northern California, or based primarily in Northern California, called Silicon Valley Bank, that essentially was bailed out by the FDIC. And what had happened to Silicon Valley Bank was that it had held a significant amount of its assets as treasury bills, treasury bonds, which historically are extremely safe instruments. But then as the Fed started raising interest rates to combat inflation, the value of these assets, dropped significantly. The longer the duration of these, the more the drop would be. And so Silicon Valley Bank, deposit holders became aware of this, and what happened was there was a classic run on the bank. Depositors caught wind that the bank was undercapitalized. They began withdrawing their deposits, and the FDIC has for a long time basically provided protection. Currently, the FDIC insures up to $250,000 in deposits, so if a bank becomes insolvent and can no longer pay depositors, the FDIC insures up to $250,000. But what happened with Silicon Valley Bank is you had a significant amount of the depositors who had deposited well more than the $250,000 limits, including a lot of companies based out in Silicon Valley. So, for example, Roku had about $420 million deposited in the bank. There was a Chinese tech firm named Kanzun, I believe I'm saying that correctly, which had close to $1 billion in deposits. There was a biotech company named Altos Labs, which had more than $500 million deposited at the bank. And so these, along with a lot of wealthy individual kind of depositors, would have been essentially had all their deposits wiped out, whatever was exceeding $250,000. Basically, these rules were in place. Everyone kind of understands these rules. And so the FDIC stepped in. Now, some people might take issue. Was it really a bailout? Was it not? Did the FDIC just kind of stabilize it? But clearly, they intervened to basically prevent this run on the bank, which would have resulted in this bank becoming insolvent, which would have resulted in, if the FDIC had stuck with its normal protocols, would have resulted in these deposit holders being wiped out. So keep that in the back of your mind. So the story, that's the backdrop for the story we're about to discuss. So the title is New Data Shows How Many Americans Are Going Without Homeowners Insurance. So it begins for thousands of homeowners in Louisiana's Terrebonne Parish, where 94% of homes were left without power after Hurricane Francine crossed its shore on September 12. Any storm damage could have been catastrophic. 1 out of 4 of the 31,000 homeowners in the coastal parish live there without homeowners insurance, one of the highest percentages in the United States. Across the country, 13.4% of homeowners, about 1 in 8, are unprotected by homeowners insurance, and that number has gone up over time. The article states that basically the part of the country with the highest rate of non-insurance, houses going without homeowners insurance, is the South, where it's about 15 or 16%. And so, this is becoming a problem as insurance costs have risen, in some cases just as a result of inflation, in some cases as a result of the risks associated with damage becoming greater, maybe driven due to the perception or the reality of climate change. Insurance is becoming more expensive. And so, the article basically talks about one of the points the article makes is that those who go without insurance are those who are least likely to be able to absorb a loss. So if you're really stretched financially and you make a decision, hey, I'm not going to insure my house, typically that's the same person that if your house does get damaged in a storm, you're not going to be in a position to kind of wear the impact of that catastrophe. If you're someone with wealth, you could basically make a decision to not insure your home. If the home gets destroyed, you might have enough funds to replace it. But those people are actually the ones who are making the more prudent choices to basically insure their home. So I'm not going to go, typically, sometimes I go line by line and kind of read these articles. What's happening in the country is many of the locations where these homes are becoming increasingly expensive to insure are in California and Florida, coastal Florida and California, some of the more expensive places in the country. And so I foresee what's going to happen in the next 5 years, 10 years, as more and more homeowners go without insurance. We're going to see instances in which, in the case of California, you could have wildfires. In the case of Florida, you could have hurricanes. You'll have a lot of homeowners getting wiped out. So their house will be damaged by a hurricane. Their house will be burned down by wildfires. And my concern is that basically the federal government is going to step in and sort of try to protect these people from their decisions. And unfortunately, we see this time and time again. The more the federal government intervenes in trying to resolve problems, it creates another set of problems. And so my concern is this will be yet another example of, and we've seen this is where it ties in with the story I told about the bank. We see instances in which losses are being socialized and gains are being privatized. And I think that we all need to strive to be have a paradigm where basically everyone understands the rules that they need to play by, and those rules are consistent and fairly applied to all groups. And so my concern with homeowners insurance is that as we go through time, we're going to see basically homeowners get protected from their own poor decision making, and that would be in my mind, send the wrong signal. But in any event, I appreciate you taking the time to listen to me talk about this story. I would love to hear your comments in the comments section below. Please don't forget to like my channel and subscribe to my channel. I really appreciate that. And until next time, everyone have a great day.